Hello and welcome back to Stocks Advisors channel. Today we'll talk about Brooks Pure Automation, traded at Nasdaq, ticker name BRKS. Well, BRKS is a stock that did show a nice upwards move during the last, let's say, month, starting from beginning of November. Here you can see of the price about 47. It went all the way until 72.50. Now the question is, what's next? Because seemingly we're like on the stop, so price is hesitant. It's kind of volatile in between 67.50 and 72. So now the question is, what's next? Is it about to decline, or the second wave can take place here? And then we should be very careful in analysis, but it looks like we might have a secondary wave. So to understand why, let's do a quick check here. So first of all, for BRKS, we know that price is already overbought RSI wise, but it's slightly declined. So now it's just at the edge of overbought region. So it might still go another wave of overbought. And this is opportunity here that might bring it for the secondary wave. Another parameter is, of course, the moving averages themselves, because as always happens for this, for the stocks that went up and now sitting on the top sometime, it's a question where it will go. And then you really need to look at moving averages here, because MACDs are usually positive waves and declining, and it could mean if we go upwards again, the secondary wave. If not, we just continue downwards. So usually MACDs and RSIs are indecisive here, and therefore you can clearly say it's only about candles and moving averages here. And with this having said, you need to look at the moving averages. Are they really going upwards with acceleration or with deceleration? And this is very important. Therefore, you can clearly see here another example for the stock historically, when it was also sitting on the top and thinking, but then it declined. And we will now understand why it did decline there and why it might still go upwards here. So first of all, as we just discussed, and on these situations when you are sitting on the top of the wave and price is still indecisive, RSIs and MACDs and other moving average parameters like exponential, so speaking of MACD, are non-informative. Only you need to look at moving average 20, 50, 200 is not that informative, and also the candles. So here we have three moving averages depicted. It's moving average 20, 50, and 200. On the left, you see their legends. It's a green, blue, and red lines. Here you see them correspondingly. And now let's look at the price action. So price action is actually sitting here in about 68.55 with a small white candle, a little bit downward shadow, so kind of a little bit bullish candle. But it's not that decisive, so these are kind of doji-like or doji-alike candles, so they are just speaking of the fact that we're sitting on this volatility level that was formed 1 week ago, and we're just sitting there and waiting. So in this, it means that moving average still will decide, because the candles are not that informative. And now looking at moving averages. So looking at moving averages, what we do see here, we see that they are going up like this last period, and also previously they were actually going like this. The same is true for moving average 50, the blue line, so it's kind of going with acceleration upwards. The same is true for moving average 200. So they're all three going up, and also their second derivatives are positive, meaning that they are going upwards still with acceleration. You still don't see any bending. You can still say that moving average 20 is kind of linear already, so its second derivative is almost zero. Yes, that's true, but it's still a little bit indecisive, at least for moving average 50, it's still kind of positive, so it still might spike. And if it does, then actually you can make some profit here. It's still not advised to wait too long. I would just exit exactly at the previous top, so 72.50. So R1 line just to exit, and it's already a buy call here, so you can buy in this volatility of these, let's say, small candles. So this would be the first buy opportunity. And then just exit there. Should the price decline unexpectedly, then of course you can take some average downs approach, and this would be the first level, volatility level to average down. And if gold price declines further, then just wait until this very strong support line at 57.50 where you can easily average down again. If not, there is another one. So there is very well echeloned defense line, and for these stocks you usually should play carefully, and let's name them. So this would be V1 and then S1, S2 and S3. So if instead of going spike, which is the most probable situation here, price still will correct, it will correct a little bit, well, not a little bit volatility wise, but not kill completely the upwards move, it will just correct. And then the best points to enter here would be actually everything at S1 level, because it will also coincide then with moving average 20, so it will be double support. If price depletes further, then anything between S2, S3 channel will be another average down opportunity. And here it is advised to buy with 1, 2, 3 approach, meaning that you split all your funds you want to play here on 6, and then you first buy in first circle with 1 portion, second circle with 2 portions, and third one with 3 portions, and then you do accordingly to this advice. And then again, if you enter first circle and price goes up, it's advised to exit R1. At the second circle, it's advised to exit V1, and the third circle, it's advised to exit S1. This would be the safest approaches. The price goes all the way down. Now the question, why we still think that the price will go up immediately from first V1 level, and why it didn't go, for example, on the previous wave here. And this is all about second derivative or the deceleration of moving averages, especially moving average 20. If you look carefully here, you see that moving average 20 is actually slightly bending, so it's going like this. So it's already bending on these levels, especially here, and this is deceleration effect. The same is true for moving average 50. It is already bending all the time. The same is true for moving average 200. It's bending all the time, although it's not that important. In this case, it's only about 20 and 50. So if it's bending, it means there is deceleration, higher chance of break. The same is true here, by the way. If you look in June, you see that moving average 20 after this spike was also bending. So it was already starting to bend, and this caused indeed the price to break and then actually restart from moving average 200 here. So if it's breaking, it's bending, it means that there will be break, and then you need to seek for further support lines. And of course, it worked also in August. The support line here, the very let's throw it as a linear. The very strong support line here, of course, worked, and the price indeed did rebound from here and then went all the way up again. So this will be the S4 line. But here, still, the current situation, the moving averages are not yet bending that clearly. So there is a higher chance to have a second wave here upwards. And that's indeed would be the hope and the play for BRKS for the coming days. Might happen already tomorrow or in a couple of days, because these dodges won't take too long to decide themselves. So with this having said, that's all for BRKS. And it's purely like, let's say, the risk expectation and management play here. So don't be too greedy. Keep funds for average down as discussed here. This way you'll be the most safe and probably getting actually the highest profit you can make from BRKS in the current technical situation. Also, if you're first time watching our video, please don't forget to subscribe to our channel and press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.